From the macroeconomic perspective, let's just touch on what we see on the consumer price inflation side of things. We're starting to see core inflation ticking up, CPI sitting at a pretty much decent level, but still a slight concern. What is your view in terms of the inflation risks that lie ahead when you've got oil prices which are starting to slide back somewhat, but still not at the attractive levels of close to $100 a barrel? Alfred?
Yeah, thanks. There are basically three pieces of information which one would like to talk to. First of all, the inflation numbers we have to refer to. And then there was a release of the vehicle sales data. And lastly, an announcement last week by the Minister of Mines and Energy that fuel prices are going to go up. But I would like to start with the inflation numbers. Inflation has been an upward trend for quite some time now. Year-on-year inflation now stands at 6.4, and last month it stood at 6.9, the previous month at 7.4. For this specific month, the key driver of inflation pressures was the creation and culture sector, whose inflation, monthly inflation grew by 0.4, and annual inflation by 8.6.
Yeah.
The positive thing is that this category that was responsible for inflation pressures has only a weighting of 3% in the basket. And secondly, because of the fact that Namibian consumers' debt income ratio presently stands at about 73%, we don't see pressure from this category continuing long-term into the future. So the issues, the categories of concern to us, which we believe will be the key drivers of inflation going forward, are the categories food and fuel prices, which fall under transport.
Absolutely. So transport is down to 7.5%.
The latter category will.
Yeah, Alfred, transport is sitting at 7.5% from 8%. Food is sitting at 8.5% from 9.7%. So we're starting to see a downward momentum coming through there. But still, this is just way above that 6% target.
Yeah, Namibia doesn't really per se have an inflation target. South Africa does. Namibia doesn't have anything like that. All we try to do is to see to it that it is at such level that it does not depress consumer spending and economic growth. So that inflation targeting bracket of 3 to 6% that we have referred to is actually not existent in Namibia. Nevertheless, we're really concerned that if the inflation trend continues upward like this, it will suppress consumer spending. And as I just mentioned, the Namibian consumers' debt income ratio presently stands at about 73%. Another piece of information which came out and is informative to us is a fuel price I've just referred to. Since the beginning of the year, fuel prices have been increased since February, every month since February.
Yeah.
Currently, since the beginning of the year, octane 93 price which has been increased by $1.03, octane 95 by $1.08, and diesel by 34 cents.
Yeah. Alfred, if I could just talk about the monetary policy decision going forward, and it's interesting, I mean, obviously you don't mimic the inflation target in South Africa, but from a monetary policy perspective, it seems that you do mimic things here. When do you expect interest rates to turn?
Yes. Well, Namibia does not exactly mimic South African monetary policy per se. Okay, it's clear that our currency, the Namibian dollar, is linked on one-to-one basis with South African rand, but there are local issues that inform the monetary policy decision by the Bank of Namibia.
Yeah.
And I think the key focus now of the Bank of Namibia is price stability. They do not really target inflation per se. So, and
Okay, Alfred, unfortunately we're going to have to leave it there. It seems we've just got a bit of issue coming through on the audio front. Of course, Alfred joining us live from Windhoek, touching on the overall Namibian economy.